Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education. In this video, I want to talk about some of the options plays that I've talked about, one that's currently going on right now for anybody who was in it, and also what we can look forward to for other options plays that are out there, specifically the long straddle and how we benefit from it. So that's exactly what I want to talk about in this video. I want you to remember that while you can tune a guitar, you just can't tune a fish. All right, all jokes aside, in this video, I will be using the Moo app, and later on, I will tell you how to get up to 16 free stocks using my link that's down in the description. In the meantime, I do want to get right into business. So here we're looking at the chart for Google, and Google, playing their earnings, playing the options volatility, or the volatility that could come from it, using options in order to play that volatility. The first advantage of the long straddle is that you do not need to know the direction that the stock is going to move to use a long straddle. You buy a call because you think that the stock could go up a whole lot. You buy a put because you think the stock could go down a whole lot. Same strike price, same expiration date. For me, I like to use it as a near-term one. So for example, for Google, who reported in the after hours, the day that they reported earnings would be the day to enter that long straddle. And then the next day would be the days where you close that long straddle position, whether you lost money or you made money. And hopefully for a stock like this, it would have been a case where you would have made money. So you want that strike price to be near the money or at the money. So that way you're sitting right in between. You're straddling that price with your options. And so as long as it goes to either side of that far enough, this is one that most definitely would have worked out. So I talked about Google ahead of time. Another one that I talked about was Meta. And for Meta, and the nice thing about earnings, by the way, is you know the exact date and when it's going to happen, so you can plan accordingly, and you do not need to have a lot of your time value eaten up from the options that you purchased, where time value is always against you because of theta decay. So Meta was the next one, and for that one was about 8% from close to open the next day. And so if you exited your position early on in that one, then that would be another one where you would have capitalized pretty darn well from that. And then moving on from there, I also talked about CAT. And this one was before the market opened, so you would have had to purchase the options the day before for earnings the next day. And that one ran up about almost 9% from the time that the market opened until it closed. It closed 9% up from the previous day. Yet another one where a straddle would have worked beautifully. And so let's move from there into another one. This one so far was my biggest winner. This one was SoFi. Now for SoFi, a long straddle would have also worked beautifully. While it doesn't make you as profitable as just call options would, doing the call and the put, it defines your risk, it lessens your risk. Now, mind you, buying call options would also define your risk. However, if it goes in the opposite direction, a long straddle will protect you and still possibly be profitable, whereas just the call option, if the stock would drop in price rather than go up, it would just simply lose value with no chance of profitability because it dropped instead of having gone up. So straddle's a little bit superior in that way. It's less of a risk, but also less of a reward. So for SoFi, I didn't actually do the straddle for this one. This one, I did my homework on this one, spent a lot of time looking into it, and I believed, based off of everything I knew about the company, what I expected from their earnings, that this would be a very good earnings report for them. So on Friday, I purchased my call options at a 950 strike, I believe, with an August the 11th close. If it wasn't the 11th, I think it was August the 18th. I'd have to go back and look at my trades to find out exactly when that was. But when the market opened on Monday, SoFi was absolutely going off the chain. Now, I didn't catch the top of this, but I did get a 55% gain just from Friday to Monday through those options. Even better than that, I more than doubled what I got from that by then selling calls with a $12 strike, as this thing ran up close to $12 per share, but I figured that it would pull back pretty hard. And you can see so far, we were close to 12. Now we're down under 10. So I've actually, at this point, bought to close those options that I sold at a much lower value, and it was more profitable for me than the calls that I bought on Friday. Now, I can't talk about all the winners without talking about some of the losers, which by this point in time, we're going to have to see if they're still holding out as losers. Now, Starbucks is recovering wonderfully. I did think that they would go up to about 105. So far, they haven't. So for this one, with a long straddle, may have lost a little bit of cash, not nearly as much as I would have gotten from the other ones, certainly not as much as I got from SoFi, with picking the right direction for something that moved quite splendidly. So Starbucks, didn't work out the way that I had hoped. Another one that also, at least as of the time of the recording, didn't work out the way that I hoped, but actually now it's actually looking like it is. So where were we at? We were at about 118, and I said for this one, 10 to 12% in either direction. So from the open, which is usually when I sell them, this thing wouldn't have worked out for me, although later in the day, having held those for longer, if I decide to do that, which I do from time to time, but not often, I'm still going to chalk this up as a loss, even though it is moving pretty much as I thought it would. I've still had my doubts early on. So I'll take the loss on Starbucks. I'll take the loss on AMD. Now, another one that I talked about, and this one I use as a good example of why a long straddle can be so darn nice. So Generac, GNRC is the ticker symbol for it. Look at that drop that we had. Now, this one was trading up around $150 per share. So that's the strike price that we're going to talk about. And it's currently trading down around $116 per share. That is a $34 loss. That is over a 20% loss. So we're actually looking at a 24% loss on the day from yesterday's close. So what does that mean? Well, at a $150 strike for August the 11th, buying a call and buying a put for that strike price with that expiration would have cost you about $1,500. I know that sounds expensive to a lot of people. However, when the stock moves like it did now, what does that mean? Well, earlier, closer to the beginning of the trading day, that would have gotten you to sell about $2,200 worth. So that's about a $700 gain just overnight. So that is incredible. So that $700, that is between 40 and 50% up just overnight with the long straddle, just by paying attention to those earnings as the catalyst. Now, there's never any guarantee of that. I showed you some losers with AMD and with Intel that the straddles may not have worked out, at least initially, because not enough volatility there. They may have worked out minimally so, but even so, 1 to 2% overnight is pretty darn good, especially when you're talking about regular market movements. Now, for Generac, this is one with a long straddle that would have brought in some serious alpha. As of right now, instead of being $2,200, it is $3,300 just for the put option alone. The call option itself is pretty much worthless. So $1,500 to take the position, $3,300 the very next day. You are going 2.2x. So 2.2 times your money overnight just by doing the long straddle position. And that is incredible. That's normally a number that you would see from just buying the put options. Now, if you did just buy the put option, you are over 6 times your money overnight with a company like Generac with the movement that it has right now. And that is the power of options. Now, the nice thing is 6 times your money is what you would have made with the put option. 2.2 times is what your money is what you would have made had you taken the long straddle with the 150 strike with the expiration of August the 11th. The other nice part is the $1,500 that you spent is the maximum loss. Now, nobody wants to lose that much money, but if we pretended that this didn't move at all, if this just stayed right around that 150 or it moved just a little bit up or down, you're probably still capitalizing on a fair amount of that cash. You close out your position, you chalk it up to, tens of dollars or maybe even a couple $100 loss, which sounds pretty terrible, but then you put it against the other winners that you have and they work together. And what we're after is to win more often than we lose and to make more money than we lose, and we're preserving our capital and protecting our capital. After the market closes today, we get Etsy, and Etsy already started making its move with the market down to about $95 per share right now, and I think 10% in either direction for this one. So we could go down to about $86-ish. We could also go up to about 105, 106, and I think that's going to be the move that we see from Etsy. And if I'm wrong and it goes bigger than that, that's more profit for us on a long straddle. If it moves less than that, then that can mitigate our results for profit. So we either make less or we lose money. So none of this is financial advice. This is about pointing out opportunities that are out there in the market. So some other companies that I talked about Apple. It's currently trading just above $192 per share. And I think it still is possible. The good news that we run up to $200. That'd be about 4%. I think it's also possible that we drop down to about 187-ish. So we have about 3% to the downside. And so we're we're going to have to watch that. Maybe if we get something that's unexpected that we would drop down below this 50-day, which is this blue line that you see on here. But I think up to 200 on good earnings for Apple, strong earnings for Apple. Market bias is always part of that, but I still think we could hit that 200. And I think that it's also possible that we come down to this 50-day that we have right here on the chart. So that's for Apple. And I will not be entering a long straddle position on that, but I do expect some volatility. And depending on if you think that they're going to be bullish, well, then you can go with calls. If you think it's going to be a bearish set of earnings and we're going to have that bearish bias and pull to the downside on that, well, then you can go with put options or take no position at all. So I'm going to sit on the sidelines for this. But Apple, should Apple hit that 200, I think that's really where we're going to see that peak for a while. And I think we'll see a little bit of profit taking. Now, Apple is just a rock star of a company, champion company. We all know that. And there's a huge amount of institutions. I don't think that it would take some pretty strongly negative earnings to really unseat it from where it's at. So given where the market's currently at, given where Apple's currently at, I don't see it moving in huge ways at the time. Related to Etsy, we have Amazon that I also talked about. And Amazon is currently sitting just about, actually touched its 50-day and had a little tiny bit of a bounce as per the time of this recording. My apologies. There we go. Still not coordinated. And we'll see if earnings are the thing that allow Amazon to hold that 50-day. If not, based on what we have here, let me zoom out a little bit so we can see a little bit more of that. Amazon could drop down to about, looks like about $120 per share. So that'd be giving up about $7. It could also run back up where we would get to about $134. So I think $7 in either direction. So when we talk about that, we'll say 5 to 6% of its current price is the move that we could have there. And that could start being enough to really enter that long straddle position. As a matter of fact, with it near the 50-day like it is, breaking down through that support could be good for volatility and also peaking out at about $134 per share, maybe $135 per share. Like I said, 5 to 7% in either direction. That could be where we start seeing enough movement, enough volatility in order for a long straddle to take place. So as you've seen in this video, I have been using the Moomoo app and you get up to 16 free stocks using my link that's down in the description. All you got to do is sign up, deposit your cash. $100 or more gets you 5 free stocks with a $50 cash reward. So you're instantaneously getting free returns coming your way. That's better than what you can get in the market. $1,000 deposit gets you 15 free stocks. You still get the cash reward. And for $5,000, the 15 stocks, the $50 cash reward, and a free share of Tesla or EXPE. Tesla itself putting about $250 of value right now on top of that. And then plus from where they're at right now, I project, and also you could look back at my other videos for that. Elon was projecting that and possibly a 5x value for that one. So Apple and Amazon report earnings Thursday in the after hours. So be on the lookout for those. See if we get that 4% from Apple. See if we get that 5 to 7% from Amazon. Etsy in the after hours today, which is August the 2nd. We'll see if we get that 10% movement out of them. And so that's what I have for you for my long straddles video, and also some of the companies, how they have been doing, the opportunities that existed, and also some opportunities going forward. And I will keep picking through the markets and also through the earnings and keep looking for those other opportunities that we could have for those large movements. So thank you guys for watching this video. I really appreciate it. If you want to hear more of my commentary, check out the link for the Patreon down in the description. Sign up, get access to my Patreon exclusives, and also be part of my Discord community that I have over there. And we can talk about stocks, finance, investing, anything that you want to with me and my other community members. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning, and we'll see you in the next video.